Hello everyone, this is Juan Sarmiento and today is Thursday, May the 27th. I have something interesting for you. When you see here something like this, illegal minus 200 shares, that means you were assigned 200 shares and that means you're short 200 shares. Don't panic, it's no big deal. All you need to do now, when you get the information and you might even get a call from your broker, is look, you have 200 shares on the short, but you also have 44 long calls right here, and you can actually exercise those and that will cancel your options here. Also, you can simply pretend you're closing this, analyze closing, and that's a covered stock, and you're buying 200 shares and selling August 200 calls. How about if we sold the same strike price but a sooner, earlier expiration, say July? How about July the 9th? Because we're right now May 27th. Hey, how about June 25th? That's about a month from now. You can do that, and look, you get 198 is your price here, which means you are paying $2, almost $2 less than to buy those back, and that is because you have those options with some extrinsic value. So let's do that, and that's all there is to it. Confirm and send. So you can compensate by the short shares with short calls, or simply selling some of your existing long calls. You can also sell June 200 calls, 200 puts. How about that? After all, they're available for you because you have 4 long puts. So we're going to sell same strike price, June 25th, 200 puts, 200 meaning the strike price right there, and you say bid. Okay, let's sell 2, and then you say the risk profile, and that's your position right there. You're gonna get $1.44 for those two puts. Times 2 is 288. Okay, times 100, $288. So let's confirm and send that. And when this all gets filled, we end up with the same Genie trade that we wanted to have. There's your puts. Okay, let's go to the monitor tab and make sure this gets filled. Okay, between now and the end of this session, yeah, it got filled. I didn't do anything. So let's go back to the Analyze tab. And there you have it. It's your typical Genie trade. Looks really good. And your position, your 200 shares short, went away. Okay? And you didn't pay, you actually got some credit for doing that. And don't worry, it might seem scary if you get a call from your broker, but that's all you need to do. And your broker would tend to do something like that to make sure that you don't lose any money. Okay, let's go and check all the trades here. DHR, and they expire in June the 18th. Plenty of time for us to let it work a little. Feb, that's Facebook rather, and those are 25 June. Okay, we're in May, so there's plenty of time for that as well. GS, that's Goldman Sachs, and these are expiring tomorrow. Okay, so the call obviously is in the money, the put will expire. Okay, how about we do this? Analyze closing, analyze rolling. Let's roll that, and we can go to June the 28th, 25th. Okay, and we can even add a put. Okay, let's go to the Add Simulated Trades, look for the June 25th, and we are looking for the 330 put right here. press the control key and click once on the bid of your 330 put there, and that gives you one more put. And guess what? We have one short put, two long puts, and one more is 2 and 2. Okay, by tomorrow the short put will expire and we end up with one. Okay, let's do that. And we're getting $2 in credit there, times 100, $200. And the 365 call, we could even roll it up to 370, and that would reduce my delta exposure. Let's take a look at the stock. Do I think it's going to go higher? Not particularly. It seems to be forming this triangle. It may break up or it may break down. So how about if we neutralize it a little by rolling this call up? Analyze rolling. And we go to from July 365 to the same expiration, only 370. Same expiration, July 16. That gives me $265 because it's 265 times 100, and that neutralizes my delta a little more. Confirm and send, and then I get more money back. Let's wait until that gets filled. There is still one more, I think. Yeah, my three-sided trade is not filled yet. Okay, you see the mark has reduced, so let's change that. Cancel, replace, remove the lock, and that is $1.98. And keep doing that until it gets filled. Okay, let's go to IBM, Analyze tab. This is 11th of June. I like it the way it is. Intel is quite a bit high delta. Let's take a look at the chart. Is it likely to keep on going higher? Yeah, but it might reverse. So I'm going to neutralize it a little bit. How do I do that? Well, it's time to sell some calls. We have 10 calls, and we have 5 short calls, 5 long calls. Let's sell one of these. Just sell one. And that reduces my delta to 102. Let's reduce it further. And that's 52, even one more. Yeah, I like it, and that's completely neutralized. There it is. It got filled right away. Let's go to Lowe's. Oh, this is up here in the middle. June 4th. We can wait until, well, no, that's next week. So how about we roll it over? And I see, do you have puts and calls? I tell you what, let's wait until next week and do something similar to what we just did with GS. That is, we would roll over the call and add a put. You can even roll over the call right now and then the put next week. Analyze rolling, and we are going to buy back the June and sell a month from now. That will be July the 20th or June 25th, and that gives me only 27 cents. But look at the deltas. It goes from minus 3.15 to 16. So it neutralizes, but most of all gives me some credit. More importantly. Okay, we'll see if it will fit. And it did. Okay, so next week, as we get closer to expiration, we could sell to June 25th, 170 puts. But to do that right now is not interesting, not a good opportunity. So let's wait until next week. And finally, NUE. It's funny because I have these calls, 95, 195 long, and yeah, that's sort of a diagonal right there, and that looks bullish. And then I have this 575. That's worthless by now, unless of course the stock collapsed and like a lottery ticket, it could make us money. So there's no need to do anything on that. Let's go back to the monitor tab and see if we can fix. Okay, let's reduce a little bit, like let's say 5 cents, and see if we will fit that way. Fill. 1, 2, 3, 4, 5. Confirm and send. No, let's try it again. Cancel, replace. Let's reduce 5 more. And then sooner or later we'll fill. If not, do the call side first and then the put side first. Second. Let's do that. Cancel that. Analyze. GS. Okay. So first the call, analyze rolling. And where are we going to roll it to? June 25th. Okay, 330, 330, 32 cents, 30 cents. And then we're going to sell the put here. And again, let's go to the add simulated trades. And here is my put, June 25th. Just click once there. And $1.26 for that put. The put got filled right away, so that's a good sign. And then the call, we can adjust until it gets filled. If not, what is going to happen is you end up with short calls, like it happened with the other trade, the UPS trade. Okay, these things happen, but if it happens, you know what to do. In my case, I only check this once a week, but you should, be checking more often in case you're getting close to expiration. And if you think that it's deep out of the money, do the rollover at any time. Okay, that's all there is to it. Okay, I'm going to. This is going to get a sign if I don't do something about it. Okay, in a case like this, I even want to be assigned because this is very minimal credit that I'm getting for that. I'm doing the credit as a sort of a standard trade that I must do in order to keep on going. Not because I'm perceiving too much credit for it. 5 cents is as low as I will go, and then let it, if it doesn't fill between now and the end of the day, it's fine. Okay, that's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.